Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, now let's shift to the gold market. Gold market shows also very interesting price action on the daily time frame, on the intraday charts, and finally the market starts to show some motion on the gold market as well. Within the previous couple of weeks we have discussed this move on the gold market, and we said that this is not impulse move, not the thrusting acceleration to the upside as here, for instance. So the probability of appearing the double bottom pattern now becomes doubt, since this is just a choppy and sloppy price action that more looks at the contraction of the market, and that is just a retracement probably from that swing to the downside. And that in fact has happened. Our final confirmation, or if we could say the moment that should have been given us the confidence with the short view on the market, bearish view on the market, was the breakout of this area. Since that was previously the resistance, then it has become the support. That was tight consolidation, and when the market in fact shows this wash and rinse of these highs and has returned right back below this area, it opens the price and opens the road right to the previous swing low. Also, if you will take a look at this pattern, you will see this A, B, C top with the minor target of the 618 extension stands around 1330 area. That's very close to the previous swing low on the right here on the daily time frame, and that is the low of the current year. In general, if you would like to take a look at the longer perspective and the big picture that we have discussed in our weekly research, you could visit our forum, so you can see link right here. Here in this research we also usually publish the fundamental view on the gold market, and we're tracking the changes in the fundamental picture on the gold market, and the analysis of the previous weeks confirms the fundamentally bearish trend on the gold market that in fact hasn't changed anything within the previous week, and that gives us more confidence with dealing on the technical picture on the bearish side of the market. So if you would like to read the weekly and monthly analysis, what we expect in the longer term perspective, you could read this in our weekly research. So our conclusion based on the analysis of the previous action was that we probably should search the possibility to enter short with some bounce that could come in the beginning of the current week. And we have mentioned the potential doubly directional pattern that could be formed on the hourly time frame. But first, take a look at the 4-hour time frame, because here we have got the pattern that could in fact decide overall short-term development. So that is the MACD predictor line. The red line is the break-even point for the trend, if you could call it, by simple MACD indicator. So this line shows in fact the price at which MACD lines will get us the crossing. This is the edge of the trend between bullish and bearish by the MACD indicator. What we've got here, we've got the bearish stop grabber pattern, and this pattern that I like to, because I prefer the stop grabbers that stands in the direction of the previous trend. So we have the plunge down, retracement, and stop grabber pattern that points on the further downward continuation. The minor target, the minimum target of this pattern is the previous swing low, is right here. So if you will take the position based on this stop grabber, that will be your invalidation point, the top of stop grabber, and so you have to place the stop somewhere above it. The target will be minimum target, is the previous swing lows right here. But since we expect the downward continuation based on the events that has happened on the daily time frame, then probably this pattern could become in fact the triggering pattern for the downward continuation, and market probably could not stop right here. It could be just a pattern that will trigger the continuation to the downside. This pattern is rather significant. The one risk that I see here is that weekly pivot point of the current week hasn't been tested. We know that in the 70% of cases, the market gravitates to the weekly pivot points and tends to test it before choosing the final direction. So when the market tests weekly pivot point, turns to the downside, it's the sentiment established on the bearish side, and market is ready to continue move down. So major risk for this pattern is the potential deeper ABCD retracement to the upside. But you should not, you will not have to place the very far stop. Since you trade based on this pattern, you could place much tighter stop based on this pattern. That will give you acceptable risk-reward ratio, if of course you would like to take the short position based on this pattern. That situation is very similar to those that we have on the euro currency. So you see the link to the euro currency video right in this page currently. Well, if you would like to take a look at it, well, be my guest. So now let's take a look at the hourly time frame on the hourly chart. That was our potential setup that we have discussed in our weekly research, and we said that one of the potential patterns could be formed here is the double repo. We also discussed the potential bread and butter, but now there are no bread and butter has appeared here. That also some sort of the look-alike double repo buy pattern. Why I call it look-alike? Because there's too much consolidation, too much candles between the bottoms of the double repo. So we have thrust down, first close above the 3x3. Market hasn't hit any significant retracement. Close below it and close above again. That was the confirmation bar of the double repo pattern, that where we can enter long this position. But the further action is not typical for the double repo, because double repo suggests some fast acceleration, because that is the capitulation of the bears and the short-term perspective. But the market trying to push price lower but failed, that tends to closing of the short position and fast acceleration. When market hits the neck of these double bottoms, it triggers the stop orders and market continue move higher further. Well, that is the nature of the double repo, but currently it's not the price action that is suggested by the double repo action. It's some sloppy chopping gradual move, some tight consolidation with no acceleration, and I think that we can't treat it as double repo. Maybe if you have entered long here, you were able to make some profit with this move, but the behavior here of the price action doesn't look like the double repo, and I think that we can't treat it anymore as the double repo. If market will continue move higher, then probably it could happen by this small reverse head and shoulders pattern, because you could see that this bottom stands at 127, with this bottom is approximately 127. So if market will turn to the upside, that could be, as I said, compounding ABCD retracement, when market could hit weekly pivot point or even 618 resistance area that we have discussed. That is the risk for our short position. So if you would like to take short based on this stop grabber pattern, that's your risk, that here could appear some reversal, for instance head and shoulders. But personally, I do not hardly believe with this, because overall price action looks a bit heavy, and well, I have some doubts that probably this could appear. Anyway, if you will still take the short by this pattern, that is your invalidation point, so you do not need to place stop right here. You could place stop slightly higher than this pattern, because if market will continue move here to this area, that probably will lead market already to the neckline, and that probably could lead to the deeper retracement. In this case, the next area to watch for the sell opportunity will be somewhere around 618 resistance, and after testing the weekly pivot point. That's the major idea on the gold market. Well, also we will release the text version of this video, so if you would like to read rather than just watch, or you would like to read also with the watching of this video, so you could visit our forum, look at the thread, and where we place the text version of this video. We will we do this daily, so each video has the text for it. And so those of you who do not like to watch can visit our forum and just read the daily update of the gold market as well.